Hey Cryptopians, welcome back to our next video on cryptocurrency fundamentals. Today I'm going to go over and explain what fear and greed index is, how to use it, and what is the market sentiment. Market sentiment involves investors' thoughts, feelings, and mood when they are buying or selling crypto assets. These feelings do not always reflect assets' real fundamental values, but significantly affect and drive the prices up or down. Financial market is a very dynamic place that transfers monetary value from impatient to patient market participants and is directly related to human emotions and behavior. The direction of a market changes depending on the overall market sentiment and humans' emotions. Once we understand the emotions related to market dynamics, we will be able to manage our own emotions and master rational buy and sell decision making behavior. Going against market sentiment creates great profitable opportunities in the future. What is market sentiment? Market sentiment is the collective attitude of traders and investors towards financial markets and assets. Market sentiment, this is what influences market cycles and affects prices. The emotional state of market participants is the main driving force behind the shifts of financial markets. Market sentiment is the overall feeling that investors and traders have regarding the price action of assets. To understand the market sentiment, we need to understand the following four emotions: fear, greed, FOMO, which is fear of missing out, and FUD, fear, uncertainty, and doubt. With a better understanding of these market attitudes, we are more likely to make better trading or investment decisions. Now let's go over these emotions, and I would like to explain what they means in relation to financial markets. Fear. This is when there is too much fear in the market that financial assets are being overvalued and too expensive. Investors and traders start quickly selling assets, which leads to excess panic in the market. This starts right at the top of the local all-time high. When market participants are feeling fearful and the overselling escalates, the prices start dropping sharply in the short to mid term. So this is the period when fear starts and panic sell starts in the market, which escalates very quickly and leads to the sell-off of all the assets sharply, and this is what takes prices down. So fear starts from the top and takes the prices all the way down to the bottom. This creates fearful overall market sentiment and could be an indication the cryptocurrency is undervalued. The moment when we see that the prices are crashing from 15 to 50 or 80%, this is the best time to buy. Greed in the market is opposite feeling to fear. If investors and traders are feeling greedy, there is too much hype in the market that financial assets are being undervalued and cheap. This normally starts around here. Investors and traders start sharply buying assets, which leads to excess greed in the market. When markets and participants are feeling greedy, the overvaluation of assets starts bubbling and leads to excess demand. The increased greed causes investors to artificially FOMO and inflate the prices of the cryptocurrencies, and they start pumping the markets up in so-called market bubbles. So around this area here, this is where people become greedy. They see prices going up, they start FOMOing, being in fear of missing out, and this is what drives the price exponentially and causes prices of crypto assets to rise exponentially to its next time high. Greed is always related to another emotion called FOMO. FOMO is a fear of missing out. Its extremely increased greed and optimism in the market causes investors to buy excessively when they see prices are pumping like crazy by 30 up to 100% in just one day. Seeing prices going exponentially like a parabola in the short term, most investors have feeling that they will be missing the opportunity to make big profits, hence why they start to FOMO, jumping into the market without thinking rationally whilst chasing always green candles. So FOMO begins, and this is what the emotions together with greed what drives prices exponentially up. How to deal with FOMO? The best way is when investors see the prices are being quickly pushed up is to pause, breathe in and out, and wait for the pump and then the dump to happen. If you see a lot of FOMO and greed in the markets, the best recommendation would be to not to jump into the market and wait for a next sell-off and cool off. What we do at this moment, we do not buy. FUD. This is when the market sentiment is becoming very negative due to a lot of bad news coming out one after another. FUD is related to a fear emotion. When price reaches its local all-time high, investors and traders become pessimistic. They are being in fear that prices of assets are being overvalued, and the massive panic sell and sell-off starts, which is followed by a lot of negative and pessimistic news from the media. This is together with a collective sell-off what drives fear in the market and drives prices all the way down. No one wants to invest at these times. FUD causes many investors who put at the top to panic and panic sell near the bottom, including the big losses. So basically, all the latecomers who are emotionally trading or investing and being caught up in the greed and FOMO normally would buy at the top, and then when they see markets in fear and correcting, they start panic and panic sell begins. If they see that their value of the investment diminishing rapidly, they start panicking and selling. Eventually, they lose their investment capital. How to deal with FUD? Most important, when you see the FUD over here and price is crashing, you just take a pause, breathe in, breathe out, and do not panic, do not sell. If it happens that you bought over here, best way is just to wait and let the market drop down, and when it's in a total fear, then you can dollar cost average and re-enter market again and buy this asset again, so you can lower your average buy price. Now let's take a look at the fear and greed index and how this is correlated to these charts. And before I show you the fear and greed index, I would like to just summarize the chart over here and how emotions FUD, fear, FOMO and greed related to its market cycles. So basically what happens every time when the market is at the bottom, this is when FUD and fear emotions are, and after some time when market recovers and going up, this is when FOMO and greed starts, which drives prices up, and then FUD and fear starts again after some time at the all-time high, at the local all-time high, and FUD and fear drives a price of asset down. So this is FUD and fear, which starts from all-time high and it takes prices all the way down to capitulation levels. And FOMO and greed starts after some time when they see parabolic price increase in a short term, and they start FOMOing, seeing green candles, they start chasing and jumping into the markets pretty much at the top. For investors, it's important to follow the market sentiment and do the opposite instead of jump into the markets over here when they feel being greedy and fear of missing out. Normally you would want to just wait for all-time high to happen, and then when the prices starts dropping down, and after they dropped by and corrected 15, 30, 50, 80%, this is when you want to start using dollar cost average strategy and average your entry and buy cryptocurrencies. And what helps to identify the correct level of the fear and greed, so you know when is actual top and when is actual bottom, this is where the crypto fear and greed index comes. When investing into cryptocurrencies, one of the DCA strategies is also to buy crypto assets when the fear and greed index reaches certain levels. So this is how you identify when is a level for fear and greed and when is the right moment to buy and sell. All you have to do is to keep an eye on fear and greed index, a kind of a visual chronometer from time to time, and make yourself ready to buy or sell, make your rational investment decision based on the fear and greed index number that you see. For full details about fear and greed index, if you would like to read and understand more, you just go to the website called alternative.me and you find a crypto and fear and greed index here. And this is how it looks. This is a chronometer of fear and greed index. There are two simple assumptions. Fear and extreme fear, which happens around here. This can be a sign that investors are worried, and this could be a great opportunity and time to buy cryptocurrencies. So when you look at the charts and you see that markets are dropping down and prices are correcting themselves, and you would think to jump into the markets at the levels when fear and greed index normally around here, and this is when they reached a level between 10, 11, this was a historical lowest level, up to 40. As you can see, today we are in 33 level of fear, which is still good time to buy. And now I would like to explain what greed and extreme greed is, and this is when investors become too greedy. This could be a sign that market is due for a correction, and this could be a perfect time not to jump into the markets, do not buy, or if you are a short to mid-term investor or trader, then could be a perfect signal to sell. Once again, you would like to look at this chronometer on this website, and if you see that the level reached between 70 up to 100, this could mean that it's a great opportunity not to enter the markets. That number could be on this chart somewhere around its next local all-time high. So when you see a number between 70, 75, 80 up to 100, this is exactly means that we are reaching the next all-time high level, and this is the level when we should stop, pause, do not enter markets, be patient, wait, and wait for the next fear phase of the market sentiment. So otherwise, if you are a short-term, mid-term investor or trader, this is a good opportunity to sell your crypto assets that perhaps you bought here at the bottoms. Just to remind you again, a good buying opportunity is when fear and greed index is in fear, extreme fear, between 15 to 44, and a great opportunity to sell or not to jump into the market, be patient, is between 70 mark to 100. This is what I normally do when I am using my dollar cost average strategy. I split my investment capital into smaller equal fiat amounts, and I just wait for the fear and greed index to drop, and then I jump into the markets. And if I would like to get out from the market and see fear and greed index above 70, then I would like to sell it. And as you can see here on the chart, market sentiment and human emotions are highly correlated with price actions, which means they are cycles and go in cycles of FOMO and greed, an exponential parabolic run, which is being followed by FUD and fear sentiment in the market, and this is when the prices are being deflated, and that what forms an entire bubble. We call it a market bubble or cycle that consists of two parts, which is bull run, FOMO and greed emotions, and bear run, which is very correlated to FUD and fear emotions. And as you can see, it just happens over and over again. And just to look at the price of Bitcoin today, we can see that we are in a fear and greed zone. As you can see, we are right at the bottom of this correction here, which is about, it has been 50% and currently today is 40%. And this could be a good buying opportunity as Bitcoin price have dropped by 50%. This would be a entry point where I would start getting into the market with a multiple entries, not with my whole capital all in, but just with small portions. I will start buying here. If market's gonna correct further down, I'll just keep DCA. And as you can see, this lower point here is just reflected by a 33 level of fear here. Just to summarize this video, I have covered emotions, FOMO, greed, FUD, fear, how they are being related with market cycles and bubbles, how market sentiment is driving the prices up or down, and how we can master other emotions, and with help of fear and greed index could make our rational sell or buy decisions and enter markets at the right time. Thank you for watching this video. I hope this was very helpful. See you next time.